Good day. It's Wednesday, November the 24th. I'm Martin Gagel with Market Radius Research. We've got CEO Dave Harper of Geodrill joining us. Geodrill is a drilling services company for the mining industry with a leading position in Western Africa, as in Ghana, Burkina Faso, the Ivory Coast, and Mali. And they are expanding into Egypt and South America, initially in Peru here. I've got Geodrill for a few reasons. The company, I've met Dave several years ago, and he's been giving updates. And the company has a long track record of solid financial results with a strong financial position. The company has shown a strong historic growth profile, and its growth outside of Western Africa seems a sensible way of growing while diversifying its geographic risk. And as Dave's been telling me the story over the years, he's done what he said he's going to do, so he's got a lot of credibility in my books. But remember, this is neither a recommendation nor investment advice. We're here to learn about the company. So Dave, thank you very much for joining us, and let's hear your pitch.
Well, thank you, Martin, and thank you, Radius, for putting on this webinar and allowing Geodrill to tell its story. So Geodrill is an exploration drilling services company operating in West and North Africa, predominantly in the countries that you just mentioned, Ghana, Burkina Faso, Ivory Coast, and Mali, and most recently, Egypt. We're also expanded into South America in this same very year. Our customers are major, intermediate, and junior exploration mining companies. Our model is flexible, and that allows us to work for either or both at the same time. So we have that diversification, which helps us to sort of work our way through the cycles. This is a cyclical business, I should point out. We drill for gold, and we drill for base metals. Again, there's some diversification of risk in there. And both actually are doing very well at the moment. We're also drilling for some EV metals like lithium. Now, interestingly, nearly all of the miners, particularly the gold miners, are citing up the need to shore up depleting reserves. Gold reserves are down globally 42% from the peak of 2011, and to make new discoveries takes many years. The current spot price of nearly $1,800 an ounce is a bit of a tailwind at the moment, as we see this as a critical support level for greenfield exploration, and particularly for the miners who are spinning off a lot of free cash at the moment. As I mentioned, drilling is a cyclical business, but the industry is actually currently entering what I would call the first innings of an upcycle, and so that's a massive catalyst. As a result, most drillers are reporting increased utilization. As a result of that increased utilization, very strong financials. Drillers are a great way to invest in the mining space because we speak for the largesse of most exploration budgets. For your information, approximately 50% of all exploration dollars that are raised goes into drillers and drilling. And Geodrill, by way of example, as one of those picks and shovels businesses, we recently released our H1 financial results, which is a record. So we'll get to that a little later on when we go through some more of these slides. But the point that I'm making here is that the sector is definitely coming alive. So a little bit of the background on the company. I'm just going to flip through some slides here, Martin, and at any point in time that you'd like me to maybe expand on anything, please feel free to jump in. Sorry?
I will. Don't worry.
So the background of Geodrill, we met some years ago. I basically founded this company 25 years ago with one rig and one contract. And we quickly went about establishing ourselves as a formidable drilling outfit. It was a very different market, way back when. The big corporate drillers were sending their old worn-out drills to Africa. I looked at this a little differently, and I thought, well, if this is going to be my primary market, then better I send modern high-performance drills. And so from the get-go, this is really, our mission statement has really been one of quality and of quantity. And also, I have to say, listening and responding to our customers' needs. It really is a simple story. It's a simple recipe, and it's proven over time to be a very successful one. As you can see by this particular graph, our rig growth has been quite impressive. It's been impressive and consistent over the 25 odd years. I only started with one rig and one contract, and our first year of business, I think we generated less than half, probably 500K in revenues. And this year, we will, for the first time, break through the $100 million barrier. We'll probably land around 110 million at this point in time. That's US dollars, I'll point out. The other thing about this business is we have always reinvested our profits back into the business as we've generated free cash from the rigs that have been the rig fleet, which has been constantly growing over the years. As we've generated profits, we've basically reinvested those profits back into the business. Now, the thing about the drilling business is demand drives utilization. And so our simple strategy has been, rather than wait for us to basically run out of rigs and then not be able to service our customers, whenever rig utilization reaches 70% of our fleet, we simply start looking at what new rigs we are going to add. And this has been a constantly evolving thing, which has basically become our business model over the years. 70% inflection point, 70% utilization is the inflection point for us to go and reinvest some of our free cash. So we recently reached that point just again. And so currently, as we speak, the rig fleet is 71 rigs, and we're looking to add about another 4 rigs. And when the future enlarges, sorry.
Sure. And so you just surpassed 70%. So that'll then push you down to, I don't know, the math is 65% utilization when you.
Exactly. And as the new enlarged fleet basically gets absorbed into the increasing market, we simply add more rigs. And this has pretty much been our business model since day one. The first customer that we drilled for 24 years ago is still a customer today. So it's really just been a story of continually taking more market share from our competitors and continually keeping those customers satisfied. It is actually a fact that Geodrill has never lost a customer. Right. We certainly lost bids, lost tenders, but never lost a customer.
Okay. So, in 2015, you had 40 rigs, and then within a couple of years, you shot up to 58, 60 rigs. So what caused that sort of inflection point? And if I remember correctly, I don't think gold was doing particularly well at that point. So it probably wasn't commodity driven. Did you enter a new market in that, and you had to sort of stock up for or sort of build up for entry into a new country?
That's actually a great question. Here's the thing, because of the Geodrill model, which is, being one of high performance and keeping the customer satisfied, we have managed, and this is where we differentiate from our competitors, we have managed through the cycles to keep busy. And so we often say we're the last ones to get fired and the first guys to get rehired through the cycles. So there's almost always a market for drilling. When gold goes off, obviously the market ebbs. In 2014, we were coming off an ebb. 2015, we got busy. 2016, we were spitting out free cash flow, so we started to add rigs. And one of the interesting things was that around us, a lot of our competitors had failed. And so we're picking up some of our competitors at 20 cents on the dollar. That's great. Basically, we put on a lot of growth when we could have been doing other things with our money, like paying dividends. That's been it's a tough decision a conscious decision that we had taken earlier in the piece, was to put those things off until later. We actually recently, for your information, just became a dividend paying company, but we could have actually been a dividend paying company a few years ago. But rather than do that, we decided to grow during one of the tough. So we're actually one of the few drilling companies that have grown through a down cycle, grown significantly.
I don't know if you're going to get to this in later slides. Obviously, mining and drilling is a cyclical business, but at the same time, you've got the explorers, which is highly cyclical. When things are great, they're throwing money at it. When things dry up, it just completely dries up. But the majors who are producing, when they're still producing and they still need to drill sort of expansion holes and get better data as they expand their drilling. So that's more a consistent, less volatile or less cyclical business as opposed to the explorers. Am I on the right track there, or can you flesh that out a bit?
You're spot on. So in the last cycle, say in 2012, probably 70% of our business was junior explorers, or 70% was miners. And as things changed and the explorers basically who were beholden to the capital markets disappeared, we then focused on drilling for miners. Today, senior miners speak for 80% of our business. Our senior miners cannot not drill. They have to drill. Else, as it's an interesting business, mining. As you mine an ounce of gold, you take an ounce off your balance sheet, and therefore you have to replace it. And most mines start with 3 or 4 year IBM mine life, and then drill underneath the exact same ore body that they've been drilling, which has helped them pay, for the capital that they've invested to build their processing plants. And so nobody drills what they'll need to be drilling in 10 or 15 years' time. It's just not done. And so we, through the cycles, got very busy drilling for the senior miners. But here's the thing, the juniors are now coming back, and they're coming back with a vengeance, and they want their rigs back. And that's what's driving our business at the moment.
Right. And I'm curious, the larger miners, they do a lot of drilling throughout the world. Why don't they develop their own sort of expertise on that and run their own drilling rigs? Why do they outsource that sort of business to guys like you?
Well, it's a specialized field. Miners are good at mining, but they're not necessarily good at exploring, and they're certainly not good at drilling. It's a different skill set. So most miners would just normally outsource a contractor like us.
Okay. And could you talk about, you say you've never lost a client, you've lost some bids. So obviously a mining company goes out and says, hey, we need to drill 10,000 meters of whatever, here's sort of the plan. And then they get a couple of contractors to bid on it. I presume they don't necessarily go with the lowest price. They sort of measure quality and experience, but try to keep your pricing honest, so to speak. Could you talk about how that bidding process works?
Well, it's a competitive bid, but price is not the only determinant. I wouldn't say Geodrill is a price proposition. We certainly are a quality proposition, and we have, the best health and safety stats in the industry. And so all these things are very important for the senior miners and for the junior explorers. The price-wise, the market is basically from the most expensive to the cheapest driller in my business would be, it could be a 20% range. And I would say that Geodrill's in the upper quartile in terms of pricing. We're not the most expensive, we're not the cheapest, but we're certainly not a price proposition. But where we add value is we get the job done in significantly less time than our competitors. And so that's important to our customers, is to get the job done as efficiently, as safely as possible to the highest environmental standards, international standards. All these things are very, very important. So, just on the rigs themselves, we basically pride ourselves on providing the full gamut of exploration drilling services. We use modern high performance fleets. You're looking at one of them here. This is one of our multi-purpose rigs. We also provide our customers with all the solutions. This particular rig is actually a rig that drills both reverse circulation and diamond drilling. And so that's massive for our customers, because essentially instead of having 2 rigs on site, they can do the same job with 1 rig. And so 1 rig is not sitting around half the time not working. So as a result, our utilization is the highest in the industry. So.
Just while we're on the topic, we do have a question from the audience. What is the lead time when you order a drilling rig right now? You place the order. How long does it take for it to get shipped?
Well, the build time is about 3 months, but the lead time in getting your rig started and getting in the queue is about 3 months. So that's 6 months, and then you've probably got 3 months of shipping.
Okay, so it's almost 9 months from you say we want the rig till it actually shows up on your doorstep.
Exactly. It's a classic opportunity cost type model. It's investing in rigs today for what your future needs will be. And the benefit is that future, so if you look at our rig growth over the years, started with 1 or 2 rigs. We're always constantly thinking once we reach 70% utilization, and if we don't address that, then essentially we're going to reach 100%. Now that's fantastic. You've got 100% of your rigs working. Let's hang around now and wait until we save enough money to, generate enough cash to go and buy some more rigs. But your customers won't wait. They'll basically move on and they'll give the job. So in part, our business model is driven by, defending our, it's somewhat defensive, to make sure that we don't lose market share. So we're always keeping the customer satisfied. It's a constant recurring theme that you'll hear through the entire Geodrill epilogue is always keeping the customer satisfied. You're in the customer service business, so I think great tools to put in anyone's survival kit when you're running a service business is to keep your business, basically keep your customer satisfied.
Well, and the other part of your ability to drill is the drills, but then you need qualified drillers because it's a fairly technical. You couldn't give me a drill. I wouldn't get much done with the drill. Like how do you attract the right guys with the right training, or as you grow, the junior guys get elevated to senior positions, and that you have a sort of a big internal training protocol or hierarchy?
Sure, it's another great question, and so this industry suffers from 2 things. In the ebb, through the cycles, and so many people unemployed, frankly. To not enough when we peak, we go to not enough drills and not enough people. So the industry is currently experiencing labour shortages. We're okay, and the reason for that is from the get-go we set up an academy, basically, if you like, for training young talent. And so that's how I joined the industry 30 years ago, as the guy that did the heavy lifting as the drill offsider, as we drill helper, if you like. And then you advance through the various programs, and then you become a driller and a drill superintendent, and then hopefully a drill manager. Well, we currently employ 1,100 people. The photograph the slide that you're looking here in the upper right hand pane is our facility in Ghana. And so what we've espoused in that particular facility is our in-house drilling academy, where we train the young talent that I mentioned. And so now a good portion of our workforce has replaced the drill trainer, the expatriate drill trainers that came from places like Australia and North America many years ago to train the young drillers. Now, effectively, what we've got is a workforce, an African workforce, which has within it African trainers that are now training Ghanaian drill trainers, training in countries like Burkina Faso, Ivory Coast and Mali, other African nationals. So it's really been, and it's a fantastic ESG story when you think about it in those terms, in terms of career development as opposed to creating just jobs. This facility is that you're looking at here is actually quite interesting. It's the largest support facility of a drilling company in the world, and it exists in Kumasi, in Ghana, in West Africa. Now, that's a hell of a statement, but the truth of the matter is that when you have drills operating in West Africa, high-performance drills, they have to operate to the highest standards. Rigs break down. That's a fact of life. So this is how we've addressed it. So we've basically incorporated in this facility, as I mentioned, we've got a drill academy. We've also got mechanical facilities for rebuilding the rigs as they come in for maintenance and total overhaul every 4 or 5 years. Another interesting thing about this facility is that some years ago we built a vertical integration model into the facility whereby we could produce our own drilling consumables, our own drilling rods, our own drilling bits. We actually even make some rigs in this facility. And what we're finding is that buying rigs from manufacturers takes a long time, they're very expensive, and they're not always standard we want. Putting the rigs at our own facility, we save time, we save money, and we actually build a better rig. So anyway, that's the, as we say at Geodrill, keep them turning, keep them earning, and that's a big part of what we do. We have this facility here, which is basically our hub, and then for operations, outlier operations like Ivory Coast, Burkina Faso, Mali, we have smaller but still quite comprehensive facilities at those locations. So yeah, keep them turning.
I'm curious. I don't have a good sense of African geography and how big distances are. Typically, how many kilometers or hundreds or kilometers away would your drill rigs get from the central units? Like, how many days travel would that be?
Well, if it's within a country, it could be up to a 12-hour drive. So if it was in Ghana and you're in the north, it could be 8 or 9, even 10 hours of driving. If it were in another country, like Burkina Faso, and you had to service something from Kumasi, Ghana, it could be a 2-day drive. And so it's important that we have the hub, which deals with the drill manufacture, the drill rods, the drill bits, the drill academy, things that we don't need at all of the facilities. And then it's important that we have those spoke operations to keep some inventory, manage that inventory, be able to lock the inventory so that it's safe. But we don't need a rod manufacturing plant at all of those facilities, and so that's why I call those the spokes. So yeah, to answer your question, in terms of size, West Africa would probably fit into Canada probably twice.
But you're typically a day or two away from your drill sites, from sort of the central hub, something like that.
Yeah, anywhere from 1 hour to generally 12 hours. We try to make the spoke relay points, if you like, in such a way that our furthest job from one of those spoke operations would be 12 hours away. And this helps us to keep our customers and our rigs turning. And again, it all speaks to the whole thing about doing the program more efficiently. And that's what that's definitely what our customers choose Geodrill over its competitors. So the operational diversification of the business, as I mentioned, I kicked Geodrill off 25 years ago. And since that time, I've been pretty much laser focused on West African market. The thing I found so attractive way back then was that the region had missed 50 years of modern exploration. In my time in West Africa, I've seen probably 3 or 4 exploration booms come and go. And the results have been quite profound. Junior exploration companies have merged into intermediate miners, who have then merged with senior miners. Nowadays, West Africa has grown into a mature market with all the big guys here, Barrick's here, Newmont, Kinross, you name them. Interesting point. Ghana recently became the largest gold producer on the African continent. Most people think it's South Africa. It's actually not. Ghana is the 6th largest producer in the world today, and it has now eclipsed South Africa. And hot on its heels is Ivory Coast, Mali, and Cote d'Ivoire. So it's quite interesting. We think of Africa. Africa is actually 54 countries. But when we look at West Africa, and we look at it on an amalgamated regional basis, remembering 54 countries, if we just take the main producing countries, which is probably 6, and take the production of those 6 countries, and if we just totaled that up, it would actually be the 3rd largest producer in the world. And so the point that I'm making is that any mining company that's not in Africa is certainly missing a substantial piece of the pie.
In terms of, I believe a few years ago, there were some issues, danger issues in Burkina Faso, or Africa, to us who don't really know much about the place, seems a little bit of a dangerous place sometimes. How do you find managing those risks of rebels or whatever types of things that seem to appear once in a while?
Well, we certainly don't want to put our people in harm's way, and we are working in what I would call Africa's best mining jurisdictions. And, you can imagine with 54 countries, at some point in time, one of them is going to block their copybook, and you may be incumbent in that country at the particular time. And so when we look at those countries, either they'll be a no-go for us, or if something happens to occur, as was the case with that country you mentioned, whilst we're there, well, I guess the decision is, do we stay or do we go? We're not currently expanding in some of the jurisdictions that we're operating in because of the reasons you just outlined. But to mitigate that and continue to, sort of fuel the growth, we're essentially just redeploying rigs from those regions to other growth regions. For instance, we're currently inundated with inquiries in South America, Ivory Coast and Egypt, actually. So what we would probably do is say, do we want to expand into one particular region, or should we be maybe taking some rigs from that region and moving them elsewhere? Yeah.
Right.
Yeah. So with all the exploration that goes on in West Africa, you can imagine that all the big drillers there are too. Some people say when we get to the financial slides in a few more slides, you'll understand that where we do definitely differentiate from other drillers. And so a lot of people say, well, what if the other big drillers come out to West Africa and start giving you some competition? Well, the fact of the matter is they're all already here. We have plenty of competitors. We've got all the big drillers and all the small drillers. Basically, anyone that's a driller is in West Africa. So, but through all of this, and we've survived and we've thrived. And in 2019, Geodrill actually became the largest driller in Africa and the 7th largest in the world. Just for your information. Yeah.
So sorry, you're the biggest drilling company in Africa?
By meterage, we drill.
Okay.
So it's actually a good point that you just picked up on there. We don't have the most rigs, although we do have a very substantial fleet. But the thing is, our drills drill. They're very highly productive. By example, okay, we have 70 rigs. The largest listed driller in the world has 700 drills. Rigs, what generate the revenues, because drillers are paid by the meter. Now, here's the thing. They have 10 times our rig fleet. They generate 2.5 times our revenue. Okay. So that's...
Someone's utilizing their assets a little bit better here.
No, utilization speaks to it, but the fact of the matter is we're more productive. We drill more meters. This year we'll drill about 1.7 million meters of drilling with 70 odd drills. That is about 2 times what any of our competitors are doing on a per rig basis. And drillers are paid by the meter. And so, this high capex model that we've got that provides us with it's like your mobile phone or your laptop. If you've got the latest, it's going to be faster, it's going to be quicker, it's going to have more memory, it's going to have performance advantages. And so we have a modern fleet of rigs. And so with that modernness, if I can use that term, comes that performance advantage. Drillers are paid by the meter. And so the objective for us is to drill more meters. Do you see my point?
With your expansion into Egypt and Peru, is now a good time to chat about that, or is that sort of for some other slides?
I was actually going to use this slide to expand into the South American story and the Egypt story, but please go ahead.
Well, then you go ahead, and then you set the table on that one.
Well, for the longest time, we've been very focused. We've been laser focused on the West African market, which has been great for us. And I went to West Africa for a reason. It was by design. But a lot of investors look at it and say, well, should you probably introduce some diversification? And I do think it probably is time. And so, recently we moved into South America, we moved into Egypt. So Egypt was a no-brainer. It had been underserviced for many years, and they recently introduced economic reform that would, and to do that, they're going to kickstart the mining industry by letting out a whole lot of new blocks. Now, as new blocks are released, they'll require drilling. And until now, Egypt has pretty much been a market which has been enjoyed by one of the large drillers, and now we've basically entered that market, and we only entered really in the last 6 months with 2 rigs. Those 2 rigs were immediately snapped up for 2 years. And we do have some other news which is just about to be announced on that. And unfortunately, I can't go live with that today, but do watch this space. There's something very big happening in Egypt imminently as we speak.
With Egypt, and did you follow a customer there? Did a customer sort of start a new project and they say, hey, Dave, we'd love to have you support us here? Or did you just sort of get some drills allocated and then start knocking on some doors and sort of build it and you'll find some customers? Was it, how did that expansion?
It was a customer that had operated in West Africa and had found themselves working in Egypt and struggling to find a drill. And so the inquiry came, we jumped on a plane, went and had a look at it, and we thought it was a very compelling investment opportunity for us. Lots of drilling and not enough drills. So we followed up and now we're there. So yeah, essentially it was just a customer that knew the Geodrill story very well in West Africa and thought it would be great to get some competition happening in Egypt. Very much the same way we've entered South America. We didn't go there on speculation. We've known it's been there for years and that it exists, and it's the 2nd largest copper producer in the world. But it was essentially a customer of ours from West Africa that was using a particular service that we provide in West Africa, deep directional drilling service. And realizing that service didn't exist in the format that we provided, basically, picked up the phone and asked us to come out. We jumped on a plane, went and had a look, and again, we were compelled by that opportunity. And I have to say, the market is really has really appreciated the diversification out of gold. We didn't go to South America chasing gold. We're drilling for plenty of gold in South America. In West Africa, and just a different time zone, a different country profile. We like Peru. As I say, it's the 2nd largest producer of copper in the world. We like copper. We believe in the EV story. We've also found Peru to be very business friendly.
And with going back to the personnel and the culture of your company, did you transfer some of your African crew into Peru to sort of input the DNA there of Geodrill, so they had that culture in that? Or were you able just to hire a new team and then get them the good equipment and say, hey, let's get some good maintenance protocols in and make sure we service our clients well?
One of our zone managers actually was working for us in West Africa, Australian chap, and Mark actually lives in Peru. He's lived in Peru for many years. It was him that actually pointed out that this opportunity had probably been overlooked for too long, and the time was right. So one of the biggest challenges I find with moving into any new jurisdiction is finding the person who's going to champion it. When we look at how Geodrill got started many years ago, it was championed by 2 people, namely myself and Terry Burling, who is today our Chief Operating Officer. Mark Scholes, who runs our West African, who worked in West Africa for us and had worked for us for many years, had basically brought this idea forward. We liked it. And so he has skin in the game. He's started a local company, brought the opportunity to us, and so it's going very well,
And Peru is more base metals. Of course, they have gold there as well. I believe Egypt is very gold centric as well, or is that a mix of minerals?
Currently, we're drilling for gold, and I believe there are other things. But for the meantime, the focus in Egypt is gold.
Yeah,
and the place is extremely under drilled. It's like just the mind boggles. As I say, I can't say too much on today's call about Egypt, but imminently, like within the next week or two, we should have something very tangible to announce in Egypt. We don't normally announce contracts because we're a contracting firm. It's just not something that we feel is something that we really need to do. Otherwise, we'd be going to press every day. But something comes along once in a while that's very significant. We'll certainly consider press releasing it. In this case, we will. Yeah. Yeah. So basically, on the diversification and new country front, things looking quite good. And the bread and butter business, of course, which is West Africa, which probably between the 60 odd rigs that are working in West Africa, 62 or 3, I think it is, speaks for, best part of 85% of our business. Yeah. At least for now. So just changing gears just quickly, and the generalists on the call, I'm not sure that, big yellow drills is everybody's cup of tea. I love them, but if you don't understand the esoterics of the business, then certainly you'll understand that I mentioned earlier before that demand drives utilization. Well, the other half of that equation is that utilization drives revenue. This is a snapshot of our trailing 5 quarters. I did mention earlier our record H1. There it is if you look at the Q1 and Q2. Basically, revenue 61 million USD, that's up 58% year over year, and 28% EBITDA margin. Net earnings, 23 cents. So we're having a great year. Wet season, Q3, to the right-hand side, you can see there Q3. So wet season is usually our slowest quarter of the year, and that's the seasonality that kicks into West Africa. But if we compare it to the previous year, as you can see, it was a significant improvement over the 18 or $19 million that we turned over a year ago. So things are definitely on the go. We turned out a almost $5 million EBITDA margin on that, and 4 cents in earnings. Generally speaking, if you can get through any wet season and actually make net earnings, that's the green bars that you can see there. If you can make earnings in every quarter, including your slowest, you'll certainly have a great year. Now, currently, of the 5 analysts that cover Geodrill, the consensus is that for the year we're going to turn over around $108 million US dollars. As I said, for the first time in this company's history, we're breaking through the $100 million barrier. We'll land at about 110. I'm happy to share that with you at this point in time. Yeah. And as I say, the interesting thing is this is a cyclical business, and we're in the first innings of the upcycle.
With over Q3 this year versus last year, you're almost $10 million ahead of last year. As we go into your Q4, should we expect a similar kind of jump at percentage or dollar wise going into Q4 and then Q1 and 2 of next year? Or do we have that same kind of growth going?
No, I think what you'll find for Q4 this year is it's going to be a slight improvement over last year. Now, what happened last year was we put in a stonking Q4. So therefore, anything improvement over a stonking quarter is a stonking result in itself. It was actually the beginning of what I would call the upcycle. I would say that was the precipice. And if you look at the quarter before, that was our wet season, which was more or less flat. It was slightly off the previous quarter. I think I haven't got the slide there, the graph there in front of me, but if I was to go back to Q2, I think we kind of did 20 million or something. So generally speaking, your wet seasons drop off and then they take off. But I think this Q4, we're going to be looking at a slight improvement over Q4 last year. The end result is that on a year-over-year basis, we will be looking at putting in probably a 38 to 40% year-over-year improvement. Last year, we did 19 million in EBITDA. These figures are USD, I'll just remind you. This year, analysts have us about 27, 28 million. So that's a more or less 10 million US dollar improvement. And net earnings about 30 odd cents USD, US cents.
Yeah, and so in terms of an EV to EBITDA basis or PE basis, where are you kind of ballpark trading at right now?
Well, that's where the real value is. The stock has been completely overlooked. We currently trade at, I just worked it out as I was coming onto the call today, as of today, it's a 3.2 EBITDA on a TTM.
Okay. Yeah.
3.5, less than 3.5 times EBITDA. Now, just to point out how crazy that is, private equity is paying 4.5 times for good private drillers. This is a publicly traded driller.
And you have a strong balance sheet as well. You don't have any debt or minor debt, which you could obviously service a fair amount of debt with your.
You must be reading my mind. It's my next slide. I'll just put it up.
Yeah.
So something peculiar to Geodrill is that by design we have a comparatively small fleet, yet we have one of the largest capex models in the world. As I say, that's by design. But so whilst we might not be the biggest driller by rig count, on a pound for pound basis, we're kind of like the tallest short guy in the room. And as I was saying before, we produce more meters with our drills, and that's what drives our revenue. So this is, and as a result of that drives our balance sheet. So high level, September 30, we had working capital $42 million USD, net equity $85 million USD. So again, talking about deep value for your investors out there, net tangible book value as of today, $2.38 Canadian. Stock price, $2. Is it 213? Is it?
$213
well, there you go.
Right now.
We're actually trading under book value.
Yeah.
Under book value. And when you think about that, you think, oh, the rigs must be all parked up and out in the back of, like a ghost town somewhere. The gold rush is gone. And the rigs are all rusty, and there's a rattlesnake under the thing there. You hear the bar room doors swing open in the saloon, and tumbleweed goes flying down, and might be thing going on out there. Not the case. This is a going concern. This is a 24/7 business. We're generating 1.6 million meters a year of drilling, employing 1,100 people, and as I said before, north of $100 million in revenue and churning out 25% EBITDA margins. It's a real business. Well, no matter where it is, it's in West Africa. Yeah. But these are mobile pieces of kit. As I said before, if there's a particular country that we're operating in that we don't like, we'll just deploy the rigs. They're not bolted to the ground. Yeah. They're not buildings. We'll just relocate them somewhere else.
Yeah.
So anyway,
in terms of that, we have a question here with someone saying the intrinsic value per share seems very, very substantially higher than the current share price. Wouldn't an aggressive share buyback add very, very significant shareholder value to the story?
It would, and we have an NCIB in place. We put it in place some years ago for that reason. It was more significant when the stock was actually trading in the $1.40, $1.50 levels, and so we were aggressive on the NCIB at the time. But here's the thing: we have cash at the moment of, I was actually just about to get to it. We have cash of $16 million and $10 million of debt. Okay, so we're net cash $5.5 million. And you'd say, well, why don't you just jump in the market and buy some rigs? Well, there's other stuff going on. We've got growth plans that we need to fund, and we need to fund those growth plans from cash generated from operations. So, yes, very good question, and it's certainly not the furthest thing from our mind. The NCIB is in place, and we'll use it when there is not a better use, if I can put it that way, for free cash flow. At the moment, it's a juggling act as to whether we buy shares, continue to fund growth, or pay dividends. And on that point, we became a dividend-paying company in the last year, and we we do not expect to take that dividend away. You know, what we're looking to build here is the drilling company for all seasons that can pay the dividends even through the cycles.
With you talk about the best use of your cash, and either sort of deal with dividends or share buybacks or capex. What is there a potential or possibility for M&A? You haven't done that to date yet, have you? You've bought some assets, some rigs, I guess, off of failed drillers, but is there potential to buy a small driller or a larger than small driller somewhere else in the world to get a toehold?
So it would make sense probably from a strategic point of view, but from a commercial point of view, the stock trades at 3.5 times EBITDA. And as I pointed out before, private equity is happy to pay 4.5 times for private drillers. And so why would they, you know, anyone wanting to sell to me would want that 4.5 times. We trade at 3.5 times, so it would be dilutive. It makes no sense. And it does point out the disconnect in valuation that this story seems to have, whether it's been overlooked, or whether it's because we're too small, or whether it's because we're too African focused. I don't know. I don't have the answers to those questions. What I do know is that small companies do grow up to become big companies, and evidently this is a company that's on the move, both by way of rig count, revenues, profits generated, and we're also stepping out. We are stepping out into more, let's say, favourable jurisdictions, or more well-received jurisdictions such as South America and Egypt. M&A does come with a certain amount of risk as well, because you pay someone a premium for their business, and you know, then with the intention that, you know, the owner would hang around for a couple of years. Well, in a lot of cases, those owners will go down the road with their newfound wealth and start a new business. And so you've got to be, you know, I think M&A comes with risk too. So to mitigate that risk, you want to be at least doing something that's accretive. You can't do, there's no accretive deals when your stock's trading at 3.5 times.
Yeah.
Oh, you asked about price earnings ratio before, I think, as well. And I'm sorry, I overlooked that point. Current price earnings ratio of Geodrill today is about 5.5 times. So net earnings, TTM, stock price, price earnings, 5.5 times. So it's a deep value story, and it's an earnings story as well. And that's also for those that like dividends. It's a dividend payer as well. As to the NCIB, the share buyback, we'll get there. We'll definitely get there.
I've been doing a lot of interrupting. Sorry, continue on,
no,
or else we can discuss some other things if you're done.
And just the final point really is the insider ownership, 42%. So I own 40+% of the shares, and so there's a lot of skin in the game there. Yeah. So off the balance sheet, we believe in doing what's right, not what's just required. The core of our vision and values is our commitment to the communities and the environment in which we operate. And Geodrill is leading the way with environmental practices and transparency and accountability with all of our stakeholders. As a result of this, Geodrill recently was awarded a couple of very significant ESG awards. The one that you're looking at there is us receiving the AMEG ESG award in Perth, Western Australia, at a conference known as the Africa Down Under Conference. Yeah, so that's the prepared slides that I have for you. You know, why own Geodrill? Well, there's several catalysts and that'll make the next few years transformational. The cycle is turning, and Geodrill is benefiting from improved gold markets and sector rotation. We're now seeing the benefits of the diligent growth decisions that we took through those times that you asked about, through 2014-15, and we increased our rig fleet in the down markets, and they were tough decisions, but we're seeing the benefit from those now. We're currently expanding into growth markets such as Egypt and South America, and so the long-term outlook is very positive, with increased utilisation and strong free cash flow and expansive initiatives. That's pretty much what I have for you. That's the Geodrill story. It's a great business. It's in the right geographies and with great prospects for growth. Yeah.
In terms of growth, you've now got a foothold into Peru. Are you looking, is that going to be sort of a baby step? You're there and then all of a sudden you'll go down into Chile and Argentina or wherever else? Or is that a little too, is that next step maybe a few years out, or could that come sooner than later?
It could come sooner than later, but for the meantime, I think we really need to just focus on what we're doing in Peru, and where plans are afoot. We're currently registered in one other South American country, Brazil, for your information, and we're talking to a company in Chile about a couple of things. But for the most part, we really need to just focus on getting our fleet of 4 rigs working in Peru. We've got a lot of work to do in terms of getting people trained and getting established and so on and so forth. But the ultimate objective is not to try and accomplish all this in the next 12 months. That would be impossible, obviously. But the ultimate objective is how can we mirror the West African business, which has been so successful for Geodrill? How can we mirror that and basically produce the same model in South America? And if we were to do that, over what period of time would that take? And that's a great question. The point I would just point out is that we are a public company and we do have access to capital markets should we decide to go down that track. And that's the difference with the Geodrill of yesterday, when we were, basically a private business owned by myself and a company that started with 100% debt in 1998. We spent the first 3 years just paying down the debt of 2 drills. And then once free cash flow was generated, all the growth was basically 100% organic, done no acquisitions along the way until we went public in 2010. And that enabled us to jettison to 35 rigs. Then we entered a down cycle. And through the down cycle, we grew. We doubled the rig fleet through the down cycle. And now we're just entering the new up cycle. And very interesting what's happening in South America. Here's the thing: can we mirror that success in a completely different continent? Yeah, we can.
Ballpark, what does a drilling rig cost?
Oh, they vary in price. The upper end, $2 million.
Okay.
But it doesn't stop with the drill. It's the drill might cost $2 million, but then there's ancillary equipment. There's light vehicles. There's tooling, bit of inventory, and so on and so forth. So I always look at it as if it's a tier 1 rig, one of our bigger rigs, it's basically $3 million invested over a hole. At the smaller end, the rigs could be like $500,000, $500,000 each, but then you've still got the same problem if you need, $500,000 to $1 million worth of support equipment. So the range sitting over a hole, if you can think of it that way, is you've got at the smaller end, you've got just north of $1 million, and at the higher end, you've got $3 million sitting over any one particular hole that we might be drilling at any one time.
Right.
As I say, very capital intensive business.
Yeah.
But these are the reasons that we've chosen these higher margin markets. I could think of nothing worse than operating a drilling business that generates a lot of money and makes none. And there's a few of them out there. Geodrill's, a different story in that regard. Everything we do is about a return on investment.
You mentioned that you have filed the paperwork for Brazil or sort of the very first steps of that. What makes you choose what's attractive about Brazil? Why not Chile, which is just south of Peru and is a very fairly stable democracy and lots of drilling and mining going on in that part of the world as well?
Well, it goes with where it all begins with the inquiry, and we just happened to have a lot of inquiries at the time coming out of Brazil. We went there and followed up on some of the inquiries, only to find that the registration process is quite daunting. And so we did what was first as necessary and then what's correct. We basically began the process of registering the business, and that took just a whole lot longer. than we thought it would. And suddenly we got very busy in Peru, so we just decided to focus on that and put Brazil on the ice for now. And also, it's a country that's, things changed since from the time that we registered there. Firstly, COVID stricken. Politics have also come into play. I'm not sure that things going on in that particular country are so fantastic for us at the moment. So we'll just, but politicians come and go, governments come and go. But the stuff we drill for, the commodities don't, and they remain in the ground for many years until somebody comes along and political situations change or commodity prices improve, and suddenly there's a market for drilling. You're absolutely spot on about Chile, but I've only got so many rigs, and as I was saying and alluding to your question earlier before about M&A, would it ever make sense? I think in the strategic sense, it may actually make more sense for us to perhaps consider an acquisition in a country like that rather than try and reinvent the wheel all over again.
All right.
It's certainly something we're looking at.
All right. Well, I guess it'd be hard to acquire something at 4.5 times EBITDA when you're at 3.5 times EBITDA, but you've got a fairly healthy balance sheet where you could put a lot of cash or put a bunch more debt on your books. Would you, if the share price wasn't in your favor, how much debt would you be willing to put on your books, or how much cash would you sort of be willing to take on to utilize towards an M&A? Any sort of thoughts on that?
Well, I think what you don't want to do in business, in the cyclical business, is take on too much debt.
For sure.
And so we have disciplines in place that are pre-programmed. Currently, if we look at our debt to equity, we're currently at about 12% debt to equity. That's total debt. That's a pretty comfortable position. We could probably easily double that before we'd even become concerned. But we have plenty of liquidity at our bankers as well. So we have cash that's immediately available from our bankers should we wish to take that at fairly attractive interest rates. Our interest rates out in Africa are a little bit higher than what you're probably used to. We pay about 7.5%, which is quite attractive actually for Africa. So I think the most important thing is to controlled growth, not growth at any cost. Only take growth where it makes sense, where the return on capital, the return on investment is within our sort of disciplines, and not to take on too much debt. Preferably no debt at all. I actually don't like debt. I'm not a fan of debt at all.
Great. Some questions from the audience here. Do you have any projects of drilling in Mauritania with Kinross Tasiast or any other mines there?
For Kinross, we work in Ghana. Tasiast, we do not. We have been invited to tender on a couple of occasions, and we have never been able to convert our bid into a win. It's a country we are familiar with. I've visited Mauritania on a number of occasions. It is, but no. The short answer is no. We currently do not have any rigs in that particular country.
But it sounds like you would if the right sort of contract, or if you won the right kind of contract.
Exactly. All I got to do is get them to accept one of my bids. But being a new country, you can understand it comes with certain country risk. And being a country, generally what we tend to look at is when we move into any country, it can't be a single customer only country. And Mauritania, unfortunately, is a little bit like that. There has to be a market. So if you go in and the one customer that you go in for suddenly decides that for whatever reasons they want to terminate contracts or, put some drilling on hold for 6 months, what do you do with your rigs? And so it puts you in an awkward situation. Do I Do I stay or do I go? Rigs aren't the easiest things to get across some of these borders. So in looking at that particular country that you just mentioned, it does suffer from the fact that there's only a small handful of companies operating there and one large customer. And so it really doesn't meet our criteria. But that doesn't mean that we won't bid the job. It just means that perhaps we won't bid it as competitively as the incumbent driller that they have.
It sounds like it has to be on your terms. You're not going to do the business at any cost. If it's got the right economics to cover the risk, then you'd be doing it.
Correct.
All right. Some more questions. If demand is picking up with the juniors back in the market and capacity and it takes a long time to add capacity, what are the forecast for rate increases? I guess the rates that you charge, have rates been increasing? Have you been able to push through higher rates and better margins? And I guess going like with so many supply chain issues and energy prices going up, is oil or fuel a big input? Are some of the economics changing with the strange fluctuations the global economy is going through right now?
So with increasing rig utilisation for Geodrill and the industry, drilling prices are unsurprisingly on the move, and they're in the right direction. However, so are costs. And so I would say at this point in time that drilling rate increases have kept pace with cost increases, and perhaps a little better. The real inflection point for drilling increases across our industry is when the industry reaches utilisation 50%. And the global drilling industry, is essentially on the cusp of reaching 50%. Through the troughs, through the peaks, the industry goes from a trough of 20% to more or less a peak of 60-65%. By comparison, Geodrill's peaks and troughs are kind of 25% up to 75%. And so I think where we're at right now, as I said, we're in the first innings of an upcycle. So the good news for drillers is that prices are on the increase, but it's only just begun in earnest. And one final question here. Have you ever thought about Zimbabwe? I have been to your yard at Nikwata, a brilliant facility in operations. We'll be back to propose services from your company. So so an industry insider there chatting with you. But I guess the question is Zimbabwe, how's that as a potential country? Well, thanks to that particular caller for the heads up. That's Anyankwanta. It's a real hard one to pronounce. I won't even begin to try and spell it for you, but it's Anyankwanta. It's in Kumasi in Ghana, and I would agree it's an amazing facility, unlike anything any drilling company would have anywhere in the world. Zimbabwe, yes and no. We have looked at it. Not just yet. It's not the right time, and we really need to focus on what's happening in Egypt for the moment. So really, I think until we've got those two new markets well-oiled and going well, I'm not really looking at sort of expanding into any new geographies. The fleet that we have is 70 to 75% utilised, which for all intents and purposes is 100% utilised, because 20% of the fleet will always be either in the workshop or on a truck or stuck in customs or on a boat somewhere. So we're a bit tapped out for rigs. Zimbabwe will be an interesting proposition at some point in time. Geologically, it's a very sound country. It's certainly suffered from political risk over the years. There's no question about that. Our executive GM is actually Zimbabwean, believe it or not. So we've got a great heads up when the time comes, but not for now.
Right. Well, we should wrap it up here. Thank you very much for your time, Dave. And what I like to always end these conversations with is you've referred to this before, but you don't have a ton of news releases come out. You got your 4 quarterlies and a couple more that come out. You said hopefully there'll be a big contract announcement in the next little while coming out. Any other sorts of news flow that investors should be keeping their heads up on? Or is there, what's a way for, given you don't have a ton of news flow, what's a good way for investors to kind of keep up to date on how Geodrill is doing, or how the circumstances in your various countries are progressing?
Well, there's obviously websites and all sorts of outlets. There is, we're also, heavily into social media. We're on Twitter, we're on, LinkedIn and Facebook, and it's the other one, Instagram, I think. So as and when things happen, which are newsworthy, we usually put stories there. Our website, geodrill-gh.com is always good. For the most part, we don't generally announce contracts, only because we are a contracting company, and by definition, we have lots of contracts. But when something substantial comes along, something multi-year, multi-rig, and a substantial financial sort of value, we will certainly press release something separately. And as I say, do keep an eye on this space. There's something imminently in the works at the moment. We've essentially got a letter of intent currently being upgraded to a contract, and we just like to just have all our ducks in a row before we go live with that. This side of Christmas, certainly, and probably the next couple of weeks.
Right. And we do actually have one final question here. I've never had this asked on the on one of my webinars before, but someone's asking how to start a career in Geodrill. So we got someone looking for a job. So I would send an email to the Geodrill guys or IR, and I'm sure you'll get connected there.
Well, I think if you go on our website, there's an employment section there. It's a great industry to be in. I've been in the business over 30 years now. Started as a drill helper. Found myself a driller and a manager, and then found myself in West Africa back in the early 90s. Actually, it's the one thing I haven't touched on in this presentation. I just suddenly realized I actually live in Africa. One of the biggest things with this business is I think being able to run a business successfully is you have to be there, to champion the day-to-day workings. I actually live in Accra, Ghana. Family have all sort of grown up, and one of my children was actually born in Ghana. So we're very entrenched in Africa.
All right. Well, on that, we will wrap things up. Dave, thank you very much for joining us. And maybe we'll get you back in a few months after a few more quarters have come out, or some big news, and we can get a bit of an update on how things are progressing.
Excellent. Thanks, Martin. Thanks very much.
All right. Have a great day.
Cheers. Thanks. Great. Bye.